Welcome back to Bitcoin Treasuries. I'm Tim Kotzman here with Andrew. Andrew, how you doing today?
Doing fantastic. It's a great Friday.
Absolutely. Do you want to start with a little bit of your background? I so enjoy all of your posts where you're kind of giving us the inside track on some of the thoughts, feelings, and statements of insiders. And so I think everyone would enjoy hearing for the first time or a refresher on a little bit of your background.
Yeah, so I've had a long history in traditional finance. I mean, right out of college, I started on the wealth management side and worked for a couple of different firms. Then after about a decade, I started an online media company that followed sort of the comings and goings of the wealth management world, the Morgan Stanleys, Merrill Lynch's, UBS's of the world. And to be clear, that work was done specifically in wealth management. So financial advisors, on the ground, boots on the ground, so to speak, working with clients, anywhere from, folks that have $500,000 to invest to 50, $100 million to invest. So spent a lot of time that company was based in New York, spent a lot of time in New York City, and spent a lot of time with CEOs and leadership of those firms. Morgan Stanley, UBS, a lot of relationships there. Merrill Lynch wasn't a huge fan of us at the time, but it is what it is. They're now a small, tiny little division of Bank of America. And so, also all the way down the line into the world of RIAs, independent firms, quote unquote regionals at the time was what they were called, the likes of Stifel Nicholas or Robert W. Baird or Edward Jones. All those firms are not technically regionals. They're not in just a region of the United States. They now have offices everywhere. But based on the scale of those firms versus a Morgan Stanley or a UBS, in terms of total advisors, they were seen as a different qualifier, so to speak, of the scale of firms like that. So did that, sold that company in 2016, and was kind of looking for my next opportunity and what I was going to do next. Been an entrepreneur for most of my career, and I ended up getting invited. I got involved in Bitcoin, bought some at the time, and was just trying to understand where the asset was headed, why it was important, where it was going. And I was invited to a Bitcoin event, a Bitcoin and crypto event by a hedge fund in San Francisco. So I attended. This was early 2017. It was at that event that I was convinced that this was the next wave in finance, because the people that were there, it was a room full of extremely smart people. The people that were there were either from finance, like I was, or they were from tech, or they were engineers of some sort, right?
Mm-hmm.
So I thought to myself, it's very difficult to get a bunch of like-minded people from those three industries to be in the same room, much less pulling in the same direction. So I thought to myself, there's something here, and I'm gonna really jump into the proverbial rabbit hole, and led me to a spot where I started another company in this space. Worked hard on it for a year and a half, and it wasn't necessarily successful. Never really got off the ground, and shut down that company. And then in 2019, my partner and I, Tillman Holloway, we started Arch Public, which we've been running ever since. So now 5 years, and we've found some significant success and growth and all of those things over the 2 years. We've grown at a really, really fast clip, and so my background really gives me the opportunity to, when it comes to information that I want to pass along, if I hear something or see something and I want to make a phone call or two or send a text or two and get it from, the CEO of Dynasty or the CEO of Stifel or regional director at Morgan Stanley or UBS or whatever it happens to be, I still have those numbers in my phone and those names and those connections, so I'm able to tap into those.
How do you think through, let alone explain to someone else, the difference, at least in your view, of Bitcoin versus crypto? Like, is it all together, or how would you explain that to somebody?
Yeah, so it's much easier to describe the difference today than it was 2 years ago.
Hmm.
The reason why it's easier to describe today than it was 2 years ago is I can use quotes and action from the likes of Larry Fink at BlackRock, um, Ray Dalio at Bridgewater. I can use their quotes and their understanding of Bitcoin as a hard asset, as a meaningful, real world, monetary value in the current financial markets. I can use those quotes as it relates to the validity and the continued growth of the asset itself. Bitcoin is now absolutely a part of the traditional financial world and the levers and pulleys that exist inside of the world of finance. And it is considered, at minimum, by those that are selling it as a product, digital gold. Those are the words that are being used by absolute scions of finance, right? The Bill Millers of the world, the Larry Finks of the world, the Paul Tudor Joneses of the world. These are folks that have been around for 40 plus years. And, in terms of Larry Fink, controls enormous amounts of capital. And when he speaks, people listen. So it's very easy to make the distinction and the quality conversation associated with Bitcoin versus crypto. The other side of the ledger, so let's call it crypto, the Ethereums, the Solanas, and everything down the line. I generally, the way that I explain it to people beyond Bitcoin is I say, just assume that it's late 1999, 98, early 99, and it's the Wild West of the internet, right? And so 95% of those companies washed out, no longer exist, are in the dustbin of history. But some of them became the biggest companies in the world,
Hmm.
right? So you can go back and find a chart. It's not hard to find, of the .com era in 1999, and what the prices of the some of the biggest companies in the world went from and to, in late 1999 through 2000. And for example, a company like Priceline, which is now booking.com, went down to something like 80 cents. It's now trades at anywhere from 2,500 to 3,000 right now. And that's split adjusted, just incredible amounts of money. Same thing with Amazon. Same thing with other firms that were considered .com bubble-ish, but have now become some of the largest companies in the world. So in my mind, a huge, overwhelming portion of not Bitcoin but crypto won't exist in 5 to 10 years, but there will be some that will find traction. And again, the reason that I believe that is not some core belief inside of me, that's deeply held, and I'll fight with anybody on the internet about it.
Hmm.
It's just the reality on the ground, right? So the reality on the ground is State Street is doing work with different blockchains and different layer ones and layer twos that are not Bitcoin. BlackRock is doing work, beta focused work with different layer ones and layer twos inside of their firm that are not Bitcoin, right? The avalanches of the world and the like, right? They're doing work. They have programs where they're trying to figure out if we create product, right? If we create the next pipelines associated with a 24-hour exchange in Texas, and we're tokenizing real world assets, what is the best way to do that? We're not sure yet, and we're trying to figure it out.
Mhm.
So we're in that phase where we'll figure it out. And 5 to 10 years from now, there will be some that exist now that will be of scale and will be meaningful. I don't know what those are, though.
Got it. How do you think about Bitcoin versus the Bitcoin related equities, whether it be miners that are putting Bitcoin on their balance sheet or MicroStrategy or similar down the list?
Yeah, so I think a guy like Jeff Park at Bitwise does a really, really great job of talking about, let's call it the death of the 60/40 portfolio. And there's radical portfolio theory out there. And that radical portfolio theory would probably look like having additional exposure to more than just spot Bitcoin, that there's value in having exposure to MicroStrategy. There's value in having exposure to Bitcoin mining stocks. There's value in having exposure to any and all equities that end up putting Bitcoin on their balance sheet, right? I think Bitwise announced a few weeks back that they've put in the paperwork associated with creating an ETF that's a Bitcoin standard ETF, right?
Mm-hmm.
That's the name of the ETF, where they're going to, that ETF will invest in companies that have put Bitcoin on their balance sheet. I was on a podcast earlier this week with Matt Hogan, who's the chief investment officer at Bitwise, and he made the comment that last year, at the beginning of last year, I think there was 35 S&P 500 companies that had Bitcoin on their balance sheet. Now there's 70, more than 70 plus. There'll probably be 200 by the end of 2025. So I think there's value in having more than just exposure to spot Bitcoin, but I think having exposure to Bitcoin ETFs, having exposure to other ETFs that have exposure to Bitcoin, having exposure to MicroStrategy as an equity, and then others that are equity-based entities that derive a certain portion of their value from their Bitcoin holdings. I think that's a useful strategy. I think it's a well thought out, and people have done extraordinarily well over the past 18 months using a strategy like that, like having exposure to all of those Bitcoin adjacent type of tools.
Hey guys, this episode is brought to you by OnRamp. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risks and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault, guarded by 3 independent institutional-grade custodians, none of which have unilateral control. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. To learn more, schedule a consultation with the OnRamp team. Go to www.onrampbitcoin.com. So MicroStrategy is a levered long strategy, to kind of just put it simply. And then you have these other equities. What do you think the play is for someone that's not levered long in the same way that MicroStrategy is? Is it to just be in, whether it's a technology or healthcare or some other sector, but just somehow be differentiated with Bitcoin on your balance sheet? Or is there some other insight or takeaway or strategy that people
Yeah,
can...
I think the way that it will sort of reveal itself over the course of the next 12 months is we'll have additional companies that will put Bitcoin on their balance sheet. We will probably get an approval of a Bitcoin standard like ETF. And so, depending on how concentrated your exposure to the Bitcoin ecosystem you want your portfolio to be, you go all in, or you can keep it at a reasonable number. Um, if you're working with a financial advisor, at some point, they're going to do one of two things. They're going to hold up the caution flag and say, "Hey, you're fairly concentrated here." And if you go much further, they may even have you sign documents to say that this position, and this position were unsolicited choices by you. These were
Mm.
not solicited by me, so they're covering themselves in the case of a significant move downward, so that you can't sue them, right?
Right.
So again, me personally, given where I think Bitcoin is going in 2025, um, I think that there's value in being to have extended exposure to Bitcoin and Bitcoin adjacent equities.
One of your recent posts mentioned allocation conversations between 1% and 5%. Do you think
Mm-hmm.
it'll be in that range for the foreseeable future? And what, if any, sort of just natural progression or catalyst might take it
Yeah.
above that?
Well, you have to understand the theories behind things like 1% and 5% in the world of wealth management. Financial advisors are there to guide people, but their guiding principle is first do no harm, meaning that they're not going to make recommendations that are going to blow up somebody's account. That's the quickest way to get sued, get a mark on your U4 or U5, and then you're out of the business, right? So they're doing two things. They're trying to guide customers and clients in the right direction, while at the same time stay in business and stay in the business. Um, so from that standpoint, a 5% potential recommendation for exposure to Bitcoin, they're essentially not going to recommend a larger than 5% exposure to just about anything,
Mm.
right? So they're going to say 5% allocation to, global small cap stocks, or 5% allocation to Europe big caps, 5% allocation to gold, 5% allocation to blah, blah, blah. And it all adds up eventually to 100%, right?
Mm.
So a 5% number is a big number. That's a big number, right? So again, these conversations were not being had a year ago. Absolutely not being had a year ago. The Rubicon moment was Bitcoin ETFs being approved. So now you at least have um, these tools. Bitcoin ETF is a tool in the wealth management world, and is it going to be made available to customers? And then what are the recommendations going to be? Well, then on top of that, you then had a raging bull market in 2024, and the Bitcoin ETFs did exceptionally well from a performance standpoint and set all kinds of records as it relates to inflows. So now it's on customers' radar, right? This was the best performing asset in the ETF space, or at least way up there in the top five. So people are going to be aware of the performance, ask about it, and want some level of exposure. And so having the conversations about 1%, 2%, 3%, yeah, those are being had. And my guess is that when we get to 1%, we'll see another 100 billion that has found its way into the Bitcoin ETFs. When we get to 2%, that's another 200. It will just grow and grow and grow. And we'll see where we're at in 3 to 5 years. But just the fact that the conversations are being had, and it's about percentage allocation, that didn't exist a year ago. So it's a major step forward.
Speaking of about a year ago, and of note, this is obviously before the April 2024 halving. So your
Mhm.
pinned tweet from February of last year says price discovery and price action on Bitcoin has materially changed.
Mhm.
Bitcoin ETFs continue to demand any and all excess supply. Very, very different than pre-ETF crypto exchange demand supply price action. And then looking back, because I love the memes of the TradFi guy going, this price action is, horrible. You said today's move to 52K would have historically been quickly retraced by 5 to 10% intraday. Bitcoin ETFs acting as always on demand vacuums that are insatiable. Do you still feel that way? And can you speak to how you think it's continuing to potentially impact the price action?
Yes, very quickly. Yes, I still feel that way. And it's the reason why I keep that particular post pinned, because that was the truth at 52K, and it's shown itself to be true by the price action now at 94 and change, right? Mm-hmm. So for all intents and purposes, if we go back a week, we doubled from 52, right?
Right.
And so again, a previous, a show that I'm on every week with Scott Melker, we were on with Matt Hogan, and he said, listen, supply is the real issue here in terms of continued price discovery, because we only create a certain amount of Bitcoin every year, and the demand far, far, far outstrips what the supply is. So people may say, well, if nation states are creating, strategic Bitcoin reserves, and ETFs are buying, and companies are putting it on their balance sheet, how is there so much demand and yet price is sideways or down? But that's a moment in time. That's a particular 4 hours or 24 hours. Excuse me. If you just zoom out and you look at 2024, I mean, we started in the high 20s for all intents and purposes, and we moved all the way up to 108. There is your demand, right? There's your demand. Right. That demand is going to continue, and I think we'll see the bull continue in Bitcoin into 2025. But the price action, that part of the commentary is interesting, because what we're talking about is there has been no meaningful retracement from the 40s up to the hundreds at all. There's been no meaningful retracement. It's approached 20% a couple of times. And so in previous cycles, within 90 days of a high, we were down 30, 40, 60%, right? Mm-hmm. The last previous cycle high in 2021, we were down more than 50% inside of, I think, 100 days from that cycle high. We have not approached that in any meaningful way. And then you look at the daily price action, it's absolutely tied to, the traditional markets, right? Price action, kind of bounces and bumps, and a ton of the volume hits around 9:15 through about 10:30. So most of what Bitcoin is going to do is found in that particular day's moment. And overnight and over the weekends, Bitcoin is fairly muted. That chart is just popping along, right? Mm-hmm. And then when Monday hits, okay, where are we headed? That is so far away from 2 to 3 years ago, when the likes of Binance and Asian markets had so much more to say about the price of Bitcoin and crypto overall, in the overnight and during weekends. That's where all the action was. That has absolutely flipped. And now the action is, it's during the week, Monday through Friday, 9:30 to 4 p.m.
Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Speaking of Matt Haugen, he and others have just generally said maybe we could see a price of 200,000 or so this year, and if there's a strategic Bitcoin reserve, maybe 500,000. So without sitting here and trying to pontificate about crazy or meaningless price predictions, do you largely agree with that, or what's your view?
Yeah, well, I put I put a line in the sand last year and said that Bitcoin would be at 80K by the end of the year. I was right. I was just wrong on I was a little too low.
Mm-hmm.
We got to 80K whenever it was, and then we moved higher and higher and higher, and got to 100K before the end of the year. Then on top of that, I have actually put out that I think in 2025 we get to 250K. Um, it's hard for me to look at some of the well-intentioned and very really intelligent skeptics around the Bitcoin strategic reserve, that it may not happen, that it's, all of those things. And then I look at all of the economic appointees and advisors associated with the Trump administration. They're all Bitcoin folks. On top of that, the vice president is a Bitcoin guy. He owns a bunch of Bitcoin.
Right.
So it's hard for me to see a world where we don't get a Bitcoin strategic reserve or a Bitcoin strategic reserve light, via an executive order or something. But I think an executive order comes, and it may not be as robust as we would like it to be, but I still think it's going to happen. The devil's in the details on all that stuff,
Yeah.
as always. But I still think, at least in terms of headlines, I think it'll happen. The bigger deal is that, when that happens, there's going to be other nation states that will do the same. There's an ongoing reality in equity markets that if you add Bitcoin to your balance sheet, your stock price moves higher significantly. That can't be ignored. So that's going to continue to happen. And all of that is accretive to price. So yeah, I in my mind, we go to 250 in 2025.
One of the notes that you posted hit on nearly all of the most recent conversations asking if this should replace gold. Can you speak to what's the range or average of what someone would have as a gold weighting in their portfolio? I've just never owned gold, but
Sure.
I'm also 42, so I just
Yeah,
have no frame of
you're not
reference.
72, right?
Yeah,
You're not
yeah.
72, and you didn't live through a couple of cycles that 72-year-olds did, right?
Mhm.
And so 72-year-olds, there's a reason why gold infomercials still exist. There's a reason why Peter Schiff, as a notorious gold bug, still finds a market.
Mhm.
Still finds a sizable subsection of customers because they still exist, and those folks, boomers, still manage and own the lion's share of wealth management assets here in the United States. So they are exposed to gold. They have exposure to gold. And those numbers are, generally speaking, in that 1 to 5% number inside of their portfolio. And so, there's a lot of conversations being had at the end of 2024 and the beginning of 2025 associated with portfolios that say, I keep hearing people that have real influence with that group of folks, with boomers, the Larry Finks of the world, Paul Tudor Joneses of the world, even the Jim Cramers of the world. The people that watch those shows are not 37-year-old folks. The people that watch those shows are at country clubs or, shuffleboard games or whatever it happens to be. They're older folks.
Mhm.
They keep hearing Bitcoin is digital gold, and that's why you should own it. They've been hearing that from the Larry Finks of the world for the last year. So they're now beginning to say, okay, I've heard it enough. What's the deal with this? Should I be making a potential one-to-one exchange with my gold exposure, given that gold is at or near all-time highs, and Bitcoin has been a much better performer? and I can now put my exposure into a BlackRock ETF that's exposed to Bitcoin. Should I make that adjustment? And so those conversations are definitely happening.
Can you speak at all to the MSTR chatter has reached wealth management conversations?
Yeah. So yeah, MicroStrategy. Anytime you get an equity that ends up almost being a pop culture type of uh, phenomenon, that's where MicroStrategy is at. That in some circles, it's the performance ends up being the billboard, right?
Mm-hmm.
And MicroStrategy's, equity, it has been so fantastic over a period of time that it's not in the camp like Nvidia, where everybody knows about it and everybody thinks they should own it, and it's on the news every day. But it is finding it into conversations again, where it previously didn't and previously wasn't. And so people are asking questions about MicroStrategy because of its performance, and it's the performance has been outstanding, really substantial. And so when that happens, it's a tale as old as time that people should buy high quality equities when they're on sale as opposed to when they're at all-time highs. That's never how it happens in the world of retail. They always buy the top. I don't know if we're at the top with MicroStrategy, but I do know that people are talking about it. And so it's worth mentioning when I hear it from wealth management connections and colleagues.
I guess I'll throw it over to you if you have anything else you think we should touch on that's important or kind of on your dashboard right now, along with any closing thoughts and where people can find you out there on the web.
People can find me at my ex Twitter account, AP underscore Abacus. Been there since, I don't know, 2017 when I got into the Bitcoin and crypto Twitter world. My firm, I'm a co-founder, archpublic.com. We just released earlier this in 2024 a Bitcoin algorithm. And on January 15th, we're going to release an update to it that allows you to arbitrage Bitcoin. And instead of, I think on an annualized basis over the past 10 years, Bitcoin has returned about 44%. I think that's been the number. Our arbitrage strategy with our Bitcoin algorithm generates almost 200% a year in returns, as well as generating cash flow to the tune of a little more than 10% of your position. So we love what we do. I love what I do. I love our firm, and I love being able to talk Bitcoin and communicate with people and connect with people on social media. I appreciate the time with you, Tim, and appreciate what you do on the social media platforms and the interviews here. Bitcoin is a phenomenon, and it's going to be just as big and even bigger a part of the financial conversation in 2025 and throughout Trump's his term in office. And so, yeah, I think we're just at the tip of the iceberg. I've got my business partner and my best friend. His name is Tillman Holloway, and his X account is Texas OL61, and he has said, and he goes all the way back Bitcoin to 2012 when he was mining Bitcoin. And he has said that up until now, up until the Bitcoin ETFs came on board, most of Bitcoin's growth was subterranean. It was underground. Most people didn't understand it. Most people didn't know about it. Traditional finance didn't do anything with it. But now we're above ground. We've sprouted, and people are aware. And most will know that growth happens much quicker as it's heading towards the sun than it does underground. And that's the spot that we're at. So there's enormous opportunity ahead of us. And I'd encourage everybody to stay invested and continue to evaluate opportunities in regards to Bitcoin and Bitcoin adjacent projects and equities.
Awesome. Well, thank you very, very much for your time today, and look forward to following along with you as we go through 2025.
Thank you, Tim.